Nice recording. Awesome. So last week we left with a lot of trade ideas. I do believe we get the trade ideas on EU, gold, and also GU. That they played out very nice, especially on EU and GU. So we had our range and our breaker structure was coming in from right here for the range. But again, we have no range right here on the daily. And you cannot say that this one right here is not a structural point. So you can say that this is strong high, this right equity break structure to be a T1. Okay. Now this was a scenario if price was instantly going up, but it didn't. It just keep on dropping. That is very, very cool. Because if you drop on the 4 hour, now you see that this high right here came to be a range. Now, I don't do this process or like the 1 minute and 5 minute. Okay. The main time that you should look the structure to get your bias is mostly between the daily and the 4 hour, but there are gonna be cases where you're gonna be needing also the H1. So for example, if you take the structure of the previous week that we broke down, you have this bearish record structure right here, but even on the 4 hour, you have no clear idea on what is happening right here. So that's why you need the H1 to check a little bit of structure just to see what is happening down in there. So now we got our structure. And as you can see, we need the H1 even for this structure. Because if you go to the 4 hour, I mean, you don't have plain enough information. Yeah, you can see the price did something, but it's not clear. It just pretty lower highs. But I mean, it's kind of weird that the price just made a higher here and nothing else. But if you drop to the H1 and you have yourself a little bit of flexibility, now you understand more all the structure that has been into here. And now you know that right here, there was a lower high that got swept. And since this lower high got swept right here, we got a strong low. Also, do believe, yeah, I give you the trade ideas on Monday about my bias, and I saw also pretty much everyone getting the same buy, but we also gonna break this down. So the trade ideas, we had two options. Now, if price was very aggressively going up, that'll be a T1 because this high didn't do nothing on the previous structure, and we were anticipating a T2 to happen, but it didn't. So that opens the window that this high may turn into a T1. But if price has a reacting in between right here, that'll be nice. And we have the confirm and this breaker structure, but we're gonna get it down the road. So our week started right here with Monday. So our bias right here since price broke and continued a little bit up was bullish. And now it's just time to check the Asia session. Because as I said in the recording, if Asia was right here, I was going to long simply because it just builds up liquidity. So here we have liquidity down there, and yeah, our session started between 8 to 9. And I have to consider also these equal lows. Now, you may find a key level right here on some scenarios, not on this particular one, but there are some scenarios that, yeah, you will find a key level right here, but you have to consider that you have equal lows sitting below. So that may turn into risky area. So this is how basically I broke down the whole scenario seeing all of these areas liquidity because it makes no sense for me to price to react right here because that's almost equal lows down there. So I just got key level from the H4 like in this case, and as you can see right below it, now I selected this wick and not this body simply because I don't want to have the key level way too close to liquidity because I know price needs to manipulate it, but if it's way too close, I mean it makes no sense and just enter liquidity because if you now just go to check the 15-minute, I mean yeah, this is the liquidity for sure, but it makes sense that price may just run few pips below it just to hit this key level. That's pretty much a personal choice. It won't change that much, obviously, but this is how I gonna execute my trade in this particular case, just below, just to get a more accurate top. But if you don't care about having a nice top, and you allow yourself to have maybe a more bigger stop loss, yeah, for sure, enter right here. At the end of the day, it's not a big deal, obviously. Maybe sometimes I'll miss on this key level, but almost like is the average manipulation that's gonna happen in those cases. So just got my trade into my key level, got my stop loss, my 5 pip stop loss, and my target. I didn't even pull it to up here. I do believe just execute till here, or maybe till here. I don't remember, but do remember getting the long. That was also nice confirmation entry because price broke a high on the 50-minute, and this is internal range liquidity fitting into it on a nice key level. I got re-entry down there on an account that I'm pretty much testing to see how to work even outside time window just to get back to a more aggressive scalping style, and it looks very, very solid. I don't have the confidence to take them on a live account, but mainly this is the set I'm working with. And also, if you're trying to implement new kind of models inside your dates, for example, you're used to get a specific setup. So, for example, the London manipulation setup, you have to don't mess up too much with your statistics. So work on a single trading model that can be the Asia setup, or else the London setup. That is pretty much the same, obviously, just the name that changes, or else the trade inside the 1 minute. The reason I'm saying this is because they come with a different thought process on that case. And the thing is, you need to run a statistic on tests that you do in the same exact way. You cannot have a statistic based on different models. That means if you're running average win rate and average risk redeem, you must take them on the same exact way. So all you do is kind of little scalping. So every time you face a range, you just take it following the market structure, or else you work on specific moves. So basically the one that happens during London and New York are pretty much the main move that happens inside of a day. All right. Oh yeah, we can get a session on 1 minute and stacking for sure. But basically, I will show you right here on a ready-made chart. But yeah, we will get also a backtesting session doing this. So the bias for the whole day, or else the range that we have right here. So from this high up right here to this low right here is to clear out at least this high right here. That's where I hold the trade echo right here. Till right here, because that's the minimum target I can anticipate. But remember, the price is not, let's say, forced to reach the target. Price can just drop. For why? For what reason? There is no reason of why price can do this. Okay, price can do whatever it wants. So use it always at your own risk. Obviously, I could hold the trade till here. That'll be a nice trade, but that's not my type. I run a fund account, so even getting that 102, 103 is a pretty much a big profit in that case. But if you're trying to hold your trade, yeah, that'll be a pretty much a very sick trade, definitely. But basically, if you want to stack more trades, you know that your final target is the internal range liquidity that you have right here of your high time frame range right there. So after you get your break during London session right here, you can basically go right here and stack all the trades. So let's say that you wait for the breaker structure and this trade. Now you're here, you just want to go long on every single trade now. You had this break and this is a pullback. Okay, because this took out a strong low. So this new beginning of a pullback. Price took out the external range equity of your new confirmer range that was here, here, where the X are, and now in the range of the circle. And to break down this, now you're in the range expansion. So you wait for strong lows. Right here, you see the price run a liquidity break structure, so you can look for a long around here. This broke again, you can look for a long right here, and you're gonna get stopped out. How can you anticipate this? You can't. Okay, live with this. But now you know the price made a trading range. For this higher here, let's make a triangle to this higher here. Okay. So now you can look for a trade below all these internal range liquidity. Get your trade and basically keep on doing the same thing. Now price broke structure, you have a strong low. You get this trade, you get a TP. Strong low, you get this trade, you get a TP. Strong low, you get a trade, you get a loss. But if you get a loss, now you have a new range from this square right here to this square right here. So now you're gonna get to clear out internal range equity or else inducement. It depends, and it works. You just continue doing this infinitely. Now, when you yourself to get those many trades, you can't get rid of all those losses. Okay, that's why when you do those kind of ping pong stuff and trend following stuff, what you need to do is just allow yourself to get multiple trades. Because if you work only on a setup per day, these may not get the stuff that you want simply because you risk a lot that the only trade that you take that day is gonna get a loss. Okay, because you can see here have a very high lose ratio. I mean, it's not that high, but if you allow yourself only one trade per day and you take this trade right here as this trade right here, yeah, you risk a little bit more compared to this type of trade that you can do in London. So in terms of quality, it's better the London or the New York setup. In terms of quantity in general, when you run an edge with a lot of trades, those kind of setup are the best simply because you can get them more. Okay, but there are setups that you cannot do anything about it. Like you cannot avoid these loss right here, same as these loss right here. But at the same time, you cannot avoid this win right here. You cannot avoid this win right here. And you cannot avoid this win right here. And now out of 1, 2, 3, 4, 5 trades, 2 were losses and 3 were Ws. And remember that even though this is bigger, you also move your risk with them. So at least they're more than a 2R trades in those cases. Okay. Because when you play with those setups, you count on big numbers. Okay. This is what the edge is made of. If you plan to catch every single trade, yeah, there are ways to maybe be aware of obstacles and stuff, but it's kind of complicated stuff and you want to keep it as simple as possible. Otherwise, you will always think that there isn't a reason to pull the trigger. But now, let's play the math. Here you have so many trades, even though you start counting all of this and display those number. 5 trades, 2 losses, 3 wins right here. Now, is it worth to start thinking about why a setup should work or just start thinking, okay, this setup is gonna work. Why? Because that's the edge. Obviously, the edge is not tested on 5 setups, it's tested on thousands of setup. But look at this scenario. Would you prefer to start thinking about, oh, why this setup shouldn't work, or just to shut up and basically execute? You should execute it. Obviously execute it. Don't worry about what's gonna get a mess or not. Alright. Because price, you never gonna know if price gonna bounce to this area and go to your target. Same as it did right here. It doesn't look different. And this is the thing that you have to realize because this is the thing that I was stuck back in days. These setups looks different to this setup right here. Because this played out this, it didn't, basically. But why? There is not a reason. They are the same setup. You have a strong low, strong high, liquidity, trade. Strong low, strong high, liquidity, but this reverse. Why? There is no reason. It's just the statistic play out. So leave it and take it as a statistic. Why this setup should play out, I don't know. But this is the edge. Entering right here, placing my stop loss, and the target. So if you mind about placing your trade, let's say that you have it right here below this internal liquidity, you have your stop loss and you have your trade, almost at 2R. You take it, say, okay, then you do it, okay, you got a loss. And you just keep on doing it all the time. Obviously, those trades are better if you're trying just to aim to some external liquidity, but right here, you don't have any external liquidity because you're just riding the expansion. But let's say you're able to get a trade. Let's say you have a break. As I can see, that's a strong low. That's a QM that's got taken. So now you have officially confirmed your trading range and these are your exchange liquidity. Okay. Because remember your target is up there. So every single range that now you're gonna find is gonna be bullish. So now you go to the internal liquidity and key level, and right here you get a short. Done. You go right here, you get a short, you hit a key level, and let's say the price broke structure right here. So since price work structure here, you can anticipate price reversing, but you don't have an internal range liquidity. So you cannot take any trade. If you have no liquidity, you can take a trade. So you wait. Now, right here, you don't have any entry, but let's say if price did this, you can get a trade and aim to this high right here. Or let's just get the main entry. The main entry is the one that you have to first focus on. Don't focus on those counter trend entries. They're gonna come and you're gonna automatically do it. All right. Because a lot of people ask me how to do ping pong, how to do stuff by just automate in your brain. So the moment that you know how to mark up your range and take the main entry right here, you know how to take this short right here. Because you have a range and your target is some internal range equity or else inducement. And then you have even a re-entry right here. But this becomes automatic. But if you set your mind to start knowing, I want to get this setup, but you don't know how to get the mail setup, you're gonna fail mostly. Why? Because you're doing the step number two instead of the step number one. Because first you start to get the main entry and you start being consistent with this way of trading. Then you can start adding trades, but it's not gonna be a different as path of concept, a different way of thinking, and other stuff is the same exact way, is the same exact setup, but simply you just applying it more. That's basically what are you doing. And the cool part about this way of trading is just that you don't need to reinvent yourself. It's always, always, always the same exact way. Nothing extra, nothing less. So that's why I say it's automatic. You don't need to reinvent concepts, wait for more knowledge to come. Because the thing that you need at the end of the day is just to apply concept. Apply, apply, apply. And you're gonna automatically know everything. Now start thinking, which concepts should I do to get pimp up? Nothing. The moment that, trust me, you're gonna learn how to catch this trade, you're gonna know how also to catch this trade. It automatic. Because it's just market structure. At the end of the day, what you want is just get a range that can be made on two ways, basically. So the first one out of three kind of formation, and every single range right here is a short. Short and a short. But let's say you catch a short because your key level was right here and your entry was right here. Why did this fail? You'll never know because there is no reason, just the statistic. Same as you get rewarded here, here, and here, you get stopped out right here. Why? Is the statistic playing out? But sometimes it just plays out perfectly. Obviously, that's the scenario that we all love. But don't get stressed out about why this works or why this doesn't. Okay. Because at the end of the day, it's just an edge. But if you just start thinking about being conservative, here you have a trade, here you have another trade, here you have maybe another trade, etc. Just getting the main entries. And also, obviously, right here, you get a trade. If you start taking the main entry, what you can notice that your win rate is basically skyrocketing because you're avoiding to wait the price to reverse because you never know when price is gonna reverse. You can increase your accuracy, obviously, if you're able to spot obstacle. But remember, not always price is gonna react to obstacles. And that's something very, very important. Not always price is gonna react to obstacles. Mostly it does, but the more that you start focusing on obstacles, you're just missing the main thing. Why? And what is the main thing? Getting this entry. This is your goal, not catching all the setups. It can turn into your goal, but you need basically to be able to get the main entry. First, follow the main trend and then start adding trades. Because this is what make trading basically look simple. This looks extremely as high, high, high lows, but if you look, is always the same setup. I'm not changing this setup. That's a strong low. And right here, as you can see, that's a strong low be taken. So what is this? A trading range. Here you have a strong low. And what you can see right here, a strong low be taken. So that's a trading range. Here, that's a strong low. And here, the strong low be taken. I mean, I did the same thing 3 times, almost 4 times. If you even consider this, that's the same stuff. And that's how you can run a statistic. Doing the same thing. You don't need to reinvent stuff because you'll never catch a statistic. But if I catch this setup, now I can catch this setup because this involves Asia and those setups doesn't involve Asia. So my statistic will be kind of split on two and I can't handle it. Or I run a different account and I track my progress differently. That's a good way to do it. But I rather be focused 100% only on a single methodology, basically. And that is the good, good, good stuff. But if someone can't, that is basically the advice at the end of the day. Just do one main thing, and that's all. The consistency is made up by just having a set of rule and applying it all over the time. I don't need to see how much time this is gonna work, how many times this doesn't. Because I know the edge is profitable and what I need to do is just to let it play out. Not always price is gonna tap me, not always price is gonna hit my TP. Obviously, right here you see 1, 2, 3, 4 take profits. Okay, awesome. But not always. Maybe sometime the market is gonna reverse. Why? Because also this is structured on a high time frame, obviously. So the stuff is about it. It just ran into the statistic. Let me just check the chart. Any ranges is difficult. Okay, imagine how this algo was discovered. If I didn't know about it, they will be possible discovered. Yeah. Amazing. Now, I don't think this is how exactly the algorithm works. Okay, so don't imagine the algorithm say, oh, I must plant a range and a T1 and T2, but it's basically what is causing it. So the algorithm is causing ranges. So if you learn ranges, you also learn the algorithm on some weird ways. So you're not learning strictly the algorithm, but you're learning all the scenario that it causes. That is pretty smart to do, honestly, and that's why we can get so accurate inside the market. But and then if you just let it play out, now you can get very nice tag. Now in this case was kinda clear, dude. Why? Because price just went straight to it. But sometimes the market is just gonna break, for example, this low, play another range here to here, do it on a bigger scale, and done. And now this looks extremely crazy. But the stuff is, are you able to anticipate a T1 and T2 happening with this high frequency in your trading? And this is the real answer because this looks very easy. At the end of the day, just strong low till the target gets hit. But when you're in the live market, you need to be aware of a lot of stuff that they are happening, and you're also gonna have a lot of questions and doubts because the first stage, to master psychology when it comes to trading, is just to learn confidence about yourself and see yourself able to do something. Because this is the main a problem that comes to everyone starting trade. And this is the main thing that I faced. And the main thing that I do believe I faced in my trading before becoming profitable wasn't so much about the strategy that I tested that I was learning, etc., but was mainly about my psychology that I was basically not confident. And since I wasn't confident, it was so hard for me to take decisions and just basically do everything, even build up an analysis because I didn't want to get stopped out. I didn't want to get so many things. But the reality is that if I just trust myself, that'll be extreme more fast. Because now it's easy to say, this is gonna be a setup, this is gonna be a setup, this is gonna be a setup. But in the live market, maybe you are so insecure that you aren't even able to pull the trigger right here. Even though this looks as the textbook setup as you can even see. For example, right here you have a strong low and you have price building up at T2. This looks exactly what we look for. If you think about ranges arch models. So here you have a strong low, price broke, failure swing, tack, take it, and done. This is exactly textbook. It's a textbook T2, but why this now looks so clear, but maybe when you are right here on the live chart, you didn't pull your trigger because you were insecure. It's not stuff for this strategy. The strategy tell you like, this is the best strategy you can take right here. Or else, let's say others, maybe with internal range equity, somewhere around here, and maybe even here. The thing is, why didn't pull the trigger? Oh, maybe because the bias wasn't clear. Maybe there was this area where price was coming into that didn't give me that confirmation. All of these are just basically lies that you're feeding yourself. And those basically what is distracting you and keeping you away to become profitable. The fact that you don't trust yourself, you trust the strategy. You trust me using the strategy, you trust Ibo using the strategy, you trust everyone using the strategy, but you don't trust yourself using the strategy because every time you went long, the market went short, and every time you went short, the market turned out to be long. So, how are you gonna basically fix all of this? Just by trading. There is no secret answer to this, there is no secret process, and that is basically the stuff that everyone is struggling. There is no cheat code to be secure while you trade. To be saying, oh, I went through maybe this psychology book, the psychology video and stuff. The only way to get confident on trading is just trading and just master the fact that at the end of the day, just a statistic. So you shouldn't get so much focused on yourself and taking it as something that oh you did it wrong because there was a reason to do it right. Because at the end of the day, no one is wrong or right in the market. There are basically trade that play out and trade that they don't play out. That's basically this. For example, this week was a very nice week. There were a lot of setup except for Thursday and Friday. This was basically this set that I got and also got a little setup. I'm not gonna talk too much about it because it's not part of my checklist and trading style that I'm teaching you guys. But right here, you had a bullish break. And we all can say that this one right here is a bullish break. Because This high right here got taken, it built a bigger range from this low to the highest high of the leg. And now since price broke this low, now you have a new range, here to here. So you're gonna get a retracement, and now price broke structure. Which kind of structure price should make to make this breaker structure right here? Obviously a bullish breaker structure. So the market started to be bullish, printing high lows and lower highs. And right here, price took out a lower high. So what's gonna be this? A new trading range. So what's gonna be the bias? Bullish, because the internal range liquidity has a yeah get taken. So what you're gonna do, you can find key level, of course, but I didn't use it for my bias that day because as you can see here we have Asia, and I know that price should count to take a some range liquidity. I'm gonna mark at the key level for you, even though I didn't have it, so you can see what I was planning to get me along. This range involves more than a day, so it's good to check always a daily in this case. And as you can see, we have this negative wick, and I was waiting price to up and go up, but it didn't. Why it didn't? We will never know. Remember always, just let your statistic play out. The only thing that you know is this the target. And my interrange equity, as you can see, was this. Okay, I wouldn't execute directly simply because there is liquidity fitting into it. So maybe if I want to take it directly, just a little bit lower like this. But I'm not a huge fan of refinement. I will definitely wait for confirmation entry, even look into the time frame that pick my range. And I don't want to get involved on big ranges. That involves all the time. Just wanna quick intraday trades. That is the vibe that I get. But for the Asia session, what we have right here. Now doing Asia price already made our trading range. Okay. Couldn't you use the H4? Yeah, but since this range involves more than a day, I always need to go to my higher time frame. Higher time frame is always what I need to start. So if you're intraday, yeah, the 4 hour is your starting point. But let's say if your range involves more than a day, yeah, go and check the daily, weekly, potentially even the monthly. There are some days that you need the monthly key level, even though that's a 1 hour range. It's always good because always pick it from the highest time frame as possible. Okay, that's why I went to the daily. So our Asia formal trading range, and I know the interrange equity is right here. So what I'm gonna do during London, short, and that's what you have to do for all the day. So this will be the main entry that got back. If you miss this, because maybe you want to trade during New York, just short, short, short here. What if price stops you out? Let's say stops you out right here. Okay, now the market is gonna go bullish because this is the important thing about a failure swing. And the failure swing is what basically is gonna save you when you have the wrong bias, or let's say you are against the time. So let's say that you have this range right here. Okay. And you think you're bullish, but in reality, you're tapped in on a high time frame area where you want to go short, but you didn't know about this area because you think that you're still in the retracement because market is bullish. Okay, so what are you gonna do? You're gonna look for, oh wait, no, let's just put the opposite side. So let's say that you think you're bearish because you're coming from a high time frame area. Okay, but in reality, the market is bullish because this is just liquidity. Okay, let's put it in this way. So now you think that the market is bullish and price is gonna take out this low. Now it makes definitely more sense. So you're gonna go short into this range. You get your TP. You wanna go short into this range, you get your TP. You wanna go short, you get your TP. You wanna go short, you get stopped out. And remember that your target is this low, okay? And not the high. Because you think that the high time frame, you're bearish. And now you're gonna think like, well, what happened? Like, what is the main reason why I get stopped out? What is happening right here? Now what happened? If you look to the market structure, this high failed to take out this low. Why? Because price took a protected structural point before the lows get taken out. So what is built to? Oh, this high is gonna get taken. So now every single high, you're gonna go long. So now even though you had the wrong bias, this loss right here pretty much saved you all of this. Because right here you could try to, oh, let's short right here, let's short right here, let's short right here, let's short right here. But now the failure swing just saved you up. And this is the importance of a failure swing. Because on bad situations, it saves you. Okay. This is very, 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 very important. I'm gonna look to your chart soon. So right here, what you can see that the Asia made a very clear strong high, right on liquidity BOS. So what we're gonna do, we're gonna just mark out our key area. We're gonna go to the 4 hour. And in this case, we had two key levels. We had the order block and the body of the order block. So if we go down to the 50-minute, right here, inside the Asia, you can see liquidity. Okay. And it's very strange that price just made a high, a low, a high, and a low. And right here in the middle, there is nothing. So in this case, you can just jump down to the 5-minute to see how structure looks like. And if you go to the 5-minute, now you have a very clear understanding of what the structure looks like in this. I didn't took this key level simply because, as you can see, there are equal highs and almost a trend liquidity into it. So even though I take this, there is a very high chance the price is gonna just manipulate a little bit more. And since I don't want to have my stop loss right here, since I use mainly in those cases a 5 stop loss, I can just remove it and prefer this one right here. So I just got my trade right here, got my 5 pip stop loss, and my target with just the area low. This is the best target that you can get simply because it's the safest one, and whatever market is gonna do, it should reach this. Because imagine if I went targeting this, because I was just trying to get my 105, and below 105 I just don't get any trade. And I know the ranges played out perfectly 100% of the time. Now this will play me out as a break even. But imagine that you're running a 100,000 account and you run right here and you're already out to $3,000, but you just won 5,000 and you go back home to $0 in profit. Now you wasted almost $3,000 because you just went out. Sometimes it's gonna pay you, sometimes not gonna pay you. But if the value of money is already good, just take it out. And even though you're running a small account, they say, oh, at the end of the day, you just worth, let's say, like $50 or even $100. Just take it anyway, because you need to start thinking about percentage in return and not as money in return. Because more you start getting out of the money thing, as I say, oh, don't look to your target on the monetary value. Don't. Because more than you do, you're just gonna start having issues with it. Okay, and the main reason is simple, because you don't need to associate the money you make in trading to your skill, basically, to your skill level. More you do, more hard it's gonna be. Okay, because you cannot say, oh, I made $100 and let's say this other trader made $1,000, so oh, he's more good than me. No, it doesn't work like this. It works everything on the returning percentage that you're making, and that is basically the stuff. Because if you make a 3%, you're more, let's say, skilled than someone that's making only 1%. But again, the person that's making 1% can make those money that you make it 3%. Because let's say his 1% is 10,000 and your 3% is just $30. Okay. So this is why important to look into the returning percentage. Don't look to the money, because the money is also bad. Because if you start thinking about, oh, how much this trade is worth, you say, oh, this trade is worth 3,000. It's like, oh, wait, that's actually a lot of money. But if you start saying, oh, this trade just a 3%, 3% doesn't affect your mind because you don't even look on real life to like percentages. Right? So it's not something that you actually feel. It's just a value. Just 3%. Say, oh, okay, it's cool. That's nice. By the end of the day, you're not doing so much with it. Just say, oh, okay, that is this stuff. But if you start thinking about having so many things about how much money should be, how much money shouldn't, this builds you a lot of issues. But the thing is, look into percentage and you avoid basically everything that comes with psychology, because you're not looking directly to money, but just looking to a percentage number. So you shouldn't be getting attracted. This is what helped me, and that's why I never get the issue. Start thinking about money and focusing on that, because luckily I always knew about looking to percentage because that helped me. And if you're struggling because you see like number, yeah, looking to percentage will help you. Unfortunately, you cannot make this up on MetaTrader. That would be so cool. That instead of the money, it show you that just the percentage. So say, oh, your trade is running, let's say, 1% up. That would be more cool to don't have it focus on the psychology. But again, we cannot have everything on it. But yeah. How do you find a key level? Oh, 4 hour body of the order block. You can see right here. It's right here. I didn't get this low because that's liquidity on the 5 minute. But if you look to this, yeah, just all the liquidity just above it. That's why I just get it through it. And now if you go to the 1 minute, so I can show you also how to stack trades into this. Here, out of every single trading range, you could just get a trade. So right here you have a strong low and get it down there. Take it to your internal range equity and also your key level. And then after price took out a strong low, run liquidity BOS, and this got taken. Now you can just run all of your strong highs now. Right here, there weren't so much, because pretty much nothing, but let's say that right here is nothing. Yeah. Right here you have a strong high. You can get this short. You have a strong high. You can get this short. Now, this will be for your break even, because you should put break even if price is already here and your target is here. Definitely you should. But let's say price broke and took out this high. So you got stopped out of break even. Why you got stopped out of break even? Don't worry. It's part of the statistics. Simply price made a range here to here. So now you're gonna go long and then you're gonna go short and you're just gonna start completing all the time. Now price broke, so that's a strong high. You just get your trade, strong high, you get your trade, strong high, get your trade. All the way, all the way, all the way up. Okay. So now let's assume that you took a trade right here. This is gonna be a break even. Okay, because price never broke this low. Almost hit the target, but it never did. Why this price did this? Okay, let me just pull this back. And price now started going up, and it made a range here to here. Is it good to take a short? I mean, yes, but you have equal highs right here. So that wouldn't be my first choice to get a short. I would avoid personally, because if you take a short right here, you take into, let's say, like a triple top right here. That's definitely not a good reason to get a short. But if now you see the price took out this high, now price took out a protected high, because here we have a lower high, a lower low, lower high, a lower low, and a lower high, obviously a lower low, before reaching your target. That means that the extraction now and the retracement, and now you're gonna go back with the expansion. Okay, now look to the high time frame. That's gonna be definitely more clear. You see? Well, let me also go to the H1. Maybe it's even more cool. Yeah, definitely more cool. You see, low high, low low, low high, low low, low high, low low. Okay, now you can get so many data with here, but like, what is this? What is this? You need to drop down and get your details. More you wanna get accurate, more details you always need. Because the more data you get, you're gonna get more information. Okay, so that's why we need to check the 1 minute if you want to get a lot of trades. And you cannot do it only on the 15 minute because that will be basically a mess. Okay, and you don't want to be trading like so much setup with less data. You can just focus on main entries, obviously, but you need always such a kind of information. You cannot just run them blindly. Definitely not. Okay, so definitely don't do it. If you're doing it, always trade the 1 minute. If you're gonna maximize your trades together, all the longs and the short, you need the 1 minute. Your minute is your time frame of choice. But if you wanna just rely on the main setup like this, strong high, so you just maybe gonna get a key level right here and drop. The 15 minute usually is the one that should do it. Obviously, don't take them as single time frames. Just allow yourself flexibility, like 15 minute, 30 minute, and 1 minute, 5 minute. Like should do the job. That's why when I look to the structure mainly, I'm on the 15 minute for my intraday entries. Because also look for Asia. There's a very nice time frame. So right here, price miss. You will know the price build a failure swing after this high. Okay, because that's a protected high. Okay, so now price broke structure right here, and these turn out to be a strong low. So what is your bias? Again, still bullish, and it will be my target. So what I did right here, that's a strong low. There is no interrange equity, so we need a failure swing. Price build a failure swing, so this is gonna get taken. Simple as that. And also Asia is liquidity, as you can see right here, and this builds up just more liquidity. This week the setup were extremely clear. So we have this low, And now we're just gonna go to the 4 hour. Now, right here, I just use the 2 hours now. You can use this wick, but again, it's extremely close to the liquidity. That's not a mistake. Okay, let's put it in this way. And honestly, I didn't saw it when I was live on the chart because I was looking to this area automatically, but obviously the body of the order block is too far away when the liquidity is at, obviously. And I didn't use this. Okay, me personally. And if I took this deal, will get stopped out. But I do believe that even if I saw it, I will avoid for the same stuff that I avoided taking it even right here because that was so close. And if you go on the H1, you don't have a clear scenario. Okay, obviously, yeah, you have still this, but again, now the order block is even too far away. So in this case, I allow myself a little bit of flexibility because the H4 was way too high and the H1 was way too low. So in this case, I needed like a halfway. That was the H2. Okay, I don't use it so much, but if you need on some scenarios, yeah, you can. So that's why I use this key level. As you can see right here, you have your imbalance fill. There's also order block. That's basically what I was looking at. Now, you can call this luck, and I totally agree with you because the correct one will be this, but it will be basically a stop loss if I use a 5 pips stop loss bar. At the end of the day, it's just a personal choice. I wouldn't say this is the right setup because I look the reaction exerted. This is the one that I choose. There is anything bad with selecting the H1 key level if you were just so strict with the rules. But me personally, that's what I did. I kind of fell off on this because I didn't check the other. But again, this is the setup that I took. I wouldn't say didn't and all the stuff, but basically that is it. Okay. So I know a lot of you took it. That is very, 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 very nice. And there is nothing else that you can do in those kind of situation. But I mean, it's kind of personal choice at the end of the day. And I know a lot of you took it, but yeah, you can say the correct one is this one because usually I don't see the H2, so I kind of consider myself a little bit lucky on this setup. Otherwise, you could wait for confirmation entry. That was even more cool. So after this broke, now these are strong and low. And what is this? Equal lows. And right below the equal low, what you have? An imbalance fill. And that'll be your setup. Alright. And this is the one that I also took. Because I was still thinking about getting long, and this looks very, very nice. That's the one that I posted on Telegram also. That's the one. And obviously, my target was up here. And this is why I like to take my safe targets. Because if I hold a trade, now right here wouldn't reward me. Now, it's not a big deal, okay? Because this will basically reward me a lot. It will always make me a 1 in 10 instead of a 1 in 3. But this, let's say, will just tell me out of break even. It's not a big deal, but I don't like to get involved in those situation where everything gonna happen and basically build up for you a lot of stuff. I like to get the easiest entry ever and also the target. Don't getting something very hard, very frustrating. Just focusing for me on simplicity. This is the best thing. And also how you could approach this, I'm gonna show you because that was pretty interesting. Only 1 minute. Okay. So right here you have a break. And to get this break, what you need? A bullish breaker structure. A bullish market structure also. So you're expecting the heavy low hold. So what you have right here, a very nice strong low. Random liquidity BOS. So you just get your entry. Let's say you have your key level and stuff. You place your stop loss turn range liquidity right here. I just fix it. Okay, and your target right here. Nice. You get your 2R. Awesome. Then you do it again. You find maybe a key level down here. But here you get stopped out. Can you avoid it? No. Okay, but now you have a range here to here. So maybe you look for key level. You get your W here. It breaks. That's a strong low right here. Oh, that's ugly. So I wouldn't take this honestly. But again, let's say they just get this. What is the difference between this setup and this setup? That's no difference. Little, that's no difference. So don't look to the market and say, maybe price did tap in into something. No, no, forget about this because more you focus on getting those obstacle and stuff, more you're gonna be starting to confuse yourself. And the more you confuse, more it's gonna start to be, let's say, complicated for you to find a reason to get a consistent setup and a consistent way of trading. Because your work at the end of the day just gets consistent with just a single way of trading. And once you find a way of trading, you can just implement to get more, 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 or just basically stay on the same level. That is also nice to stay on that level. But again, there are many ways that you can actually do it. So don't stress yourself too much. Don't focus on why this played out, why this doesn't, because you'll never know. Okay. And that is this stuff. At the end of the day, you have an edge, and just let the edge play out. That should be your goal. Don't focus in on why this should work out, why this should. The market will always play out for you. And that is the thing that you have to focus on. Because if you start thinking about like, oh, this shouldn't work out, now this is the biggest issue that you can make in trading. And it's basically baiting yourself. More you bait yourself, more it's gonna be hard for you. So don't start baiting yourself and thinking, oh, this shouldn't work out. The ranges should play out. Okay, it doesn't, you can say it must play out because it's wrong, but it shouldn't play out. Now the thing is, will it play out now? I don't know. Okay, so you just execute your trade and see what you get. Right here, you execute your trade, see what you get. Same as right here, you execute your trade, see what you get. But you know that the edge is profitable, so in the long run, you're gonna get rewarded. And the thing is, during those years, you just trained your mind so many times. You started when your goal was just printing money onto trading to understand the algorithm. But you never asked in the beginning to understand the algorithm. You just asked to, yo, I just want to start trading because I want to make money. That is your stuff. So now why you're switching it to understanding the algorithm is gonna make you more money. Is something that you can achieve. No, you can't achieve it. You can't understand the algorithm because we don't have the data, luckily. Because that will be impossible to have the data. We'll basically break the whole market, break the whole economy worldwide. So obviously we can't. But the thing is, can we just make money on it? Of course, just by getting a process. A process is basically a trading plan. You wake up on the chart, you do step one, step two, step three. Are those steps, let's say, checked? Yes. Go to your trade. Done. It is gonna play out. Well, it's not part of the 1, 2, 3 process. It's just part of getting your setup. Then the part that price is gonna tap you in, is gonna hit your target, or is gonna stop you out. Is just stuff for the statistic. Longer your statistic is gonna be, more consistent your statistic is gonna be. That's the rule. So, and then you start doing it all over the time. So right here you have, oh, well, that's pretty much nothing because it's never broke. But let's say you have your strong low right here and you get your trade. So now you have a strong high, this strong high broke. So now what's next? Again, retracement ended, expansion begins. Always the same thing. I don't do different things. That's the most horrible thing that you can even do. Different thing. This is basically baiting yourself, changing concept, changing way of trading and stuff. And this also goes to the mentor. Now, me and Evil use pretty much the same concept, pretty much have the same exact way to trade, but obviously each of us has its own twist. And this basically yourself have your own twist. Okay, everyone has its own touch, its own twist, even unconsciously. Okay, because even when we talk, me and Evil, we say that we have the same way of trading, but the end of the day is a little bit different. Not too much, but a little bit different it is. Okay, but the thing is how we can just fix all of this part, just sticking to a single way of trading. More that you focus on multiple ways of trading or else doing, more you're gonna start having issues yourself because you need to follow just a single person. That's why we said always at the beginning, just focus on a single strategy or even better on a single mentor. That is the best stuff that you can actually do. Because if you do not, you're just gonna start having so many ideas, so many different point of views. And this very a bad part that I don't want you to go through, so that's why I'm saying it. But the thing is, as you can see my way of trading, if you see all the past live team calls and all the trade that we showing you, even on this call, they all take on the same exact way. The range is marked up the same exact way, the bias is get on the same exact way, the trade is taken on the same exact way. I don't change my cards. I don't change my rules. Why? Because I know the path, I know the statistic, and the statistic is gonna get involved only if I allow myself to do the same thing all over again. If you start saying, Like, yo, I'm gonna enter to this because that's this. This is not my concept. This is not my edge. Maybe it's gonna play out. Maybe the price gonna come in here, it's gonna skyrocket. But it's not my edge. So I ignore it because I don't care about getting this. That's not my part. My role is just, yo, I have a range. You see? Strong low, let's go taken. That's a range. And that's a strong high get taken. So I just look for a key level. And that is my trade. Well, let's say that my key level was here. Why price came this far? I don't know. I don't care. That's not my stuff. Because even if I try to say, oh, price came this low, why? No, you're not gonna get it. You may even find a comfort zone by saying something, but at the end of the day, you'll never know. You'll never know the reality. And more you start feeding yourself with these kind of lies, I was saying, oh, this happened because of this and this, more issues you're gonna have with your mind because you kind of feel lost in this way. And the thing that is very, very important in trading is to just don't get lost. Because if you do get lost, these where all your issues coming from. The way to don't get lost is basically just having a trading plan. At the moment that you have a trading plan, you just start following it all over the time. And that is basically the stuff. More you're just gonna start following your trading plan, you will never get lost because you know exactly when to enter, when to exit, and these are your rules. And you start saying, okay, market reacted to another area that I wasn't anticipating. Okay, I don't care. And the reason that you say I don't care is simply because you know your rules. And once you know your rules, what you can do is basically just let it play out. And that is basically this stuff. That's how you don't get lost in the market. Not just by reinventing so many rules. That's not our stuff. Definitely not our stuff. But the moment that you just allow yourself to have a rule way base of trading, you say, okay, this is my way of trading. I'm just gonna do this. I'm just gonna execute this. You just say, okay, let it play out this, let me play out this, let me play out this. And you don't get stuck out simply because, oh, I got a loss this day. I got a loss 2 days in a row. Obviously, you're not gonna get always win, 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 or even loss, win, win, win. Sometimes you're gonna get to, let's say, 2 losses in a row, and this is where your psychology is gonna start collapsing, say, oh, what I did wrong, etc. But if you know that you play your rules correctly, just let it be. I know it's hard, I know it's frustrating. I went all over to it, and I still go over to it because I still trade. And the thing is, just let it be. And that is the part. Just let it be. Because if the part is based on this part, what else you can do? Nothing. Just let it be and enjoy the process. I know it's hard because maybe it's your first time doing something related to entrepreneurship, all the stuff, and you know kind of the idea of what actually running a business is, and you're just in the idea of making a consistent way of trading, just getting wins, wins, wins. But at the end of the day, what it truly is just getting focused on a normal business. And what a real business is basically being made of. It's made of wins and losses, such as any other business. So, and this is why it gets stuck, because everyone on social media is on the internet just showing wins, wins, and wins. By the end of the day, it's a business just getting wins, and losses through the way. And the goal of running a business is not getting profitable every single day. That's completely, I'm not gonna say impossible. You can if you run very conservative trades and you almost catch more than a trade because you cannot be profitable every single day if you catch one single trade because sometimes a trade is gonna be a loss. But if you allow yourself, let's say 10 trades in a row and you have a very profitable strategy, yeah, you can potentially get profitable every single day if you don't commit any kind of technical mistakes. But I mean, it's normal to do them, so don't even focus about this. That's not your goal. Just focus on understanding that when a business has its wins, has its losses. But at the end of the day, you just let it run. It's frustrating getting losses. It's frustrating maybe if you pull the trigger on these lungs and you hit your break even, you say, oh, again, I hit my break even again. I know it's frustrating, but again, this is the stress that you have to take if you want to run a business. Not only trading. Every single business is gonna be like this. And you cannot change it. Okay. So right here there was Thursday. And on Thursday, what happened is basically nothing, as you can see. Now, we broke structure because you can see so much of the structure being involved into here, but I literally didn't saw anything. on this kind of structure. I mean, even if you look to a trade right here, I do believe, yeah, was 7:45. Yeah, that was kind of 8 a.m. right here, and price was already doing nothing. So I didn't find any opportunity for me that trade. And the thing now is this: price took out the structural point before these highs got taken out. So this is a failure swing, also T2. So this low is filling liquidity. So if you're bullish, you should look for longs right here. That's a failure swing. Could you anticipate this? No. Okay, definitely no. But this is what our idea is if you're bullish. Okay. But price just broke through the same day. That was kinda, yeah, it broke during New York. And now you have this break. Now, go back to your 4-hour time frame. What you can see right here. The price broke structure in the H1, and right here, what was our overall bias? Bearish. Okay, because that's a bearish range followed by bearish weekly breaker structure. Okay. So now what it means? Oh, again, your retracement finish and your expansion begins. Always doing the same thing. You want to see it on a lower time frame? Cool. Strong low, strong low, strong lows get taken. I'm showing you always the same thing. That is the cool part. So what you think I did right here? Short. Basically, that's what I did. Okay. Now, right here, didn't took it on EU because it missed, but I took it on GU because that's basically, I was scared about all this situation. I mean, there was a trade. I'm not gonna say there wasn't a trade, but I didn't pull the trigger because there was these equal highs right here. There was liquidity fitting into it. That was a very nice key level building up into here, but there was these equal highs. So that's why I hesitated, and I prefer myself to didn't pull the trigger, honestly, because I know that if price will stop me out, I will say like, oh, why did this happen? I mean, what is the reason the price stopped me out? What happened? By the end of the day, I just didn't execute it. There was the same exact scenario on Geo. I didn't check so much Geo this week. I just checked it on Thursday. That I see the market wasn't that clear. That wasn't nothing to me on Geo. And right here, I just say, oh, I just checked it yesterday, so why not check it today? I'm not so much consistent on trading Geo and gold. I just check them like when I want. Okay, I don't have like a specific routine. I don't check them for the week all 3 days because that would be for me kind of messy having different charts inside my head. But sometimes, yeah, I just like to check them, not so focus it into this. But yeah, that was basically the idea. So also, what's gonna be our bias for the next week? Obviously, getting the extra range equated. Okay, these are bias, so we're just gonna continue to get short into this. Okay, these gonna get our vision exactly like this. So potentially you're gonna get a short 12 external range equity. On Monday, yeah, maybe we clear out this and drop. That'll be interesting. But we will see. We will see. Anyway, I'm still bearish. So that will be my bias on EU. Let's check also GU to what we left. And as you can see, E played out nicely. As we said that the market was just going to reach some internal range equity right here, just making the pullback of this bigger range. Random liquidity BOS, random liquidity BOS, same stuff all over again. So we were left right here with this BOS. And if you go to the H4, I do believe I use the H1, honestly. Yeah, because you don't have so much data. I mean, you cannot see the structure going down right here. So we go to the H1, you see a break right here. And that was Monday. Yeah, Monday wasn't clear. Tuesday wasn't clear. That was Wednesday. Oh yeah, that's why I got the short. So yeah, price broke, you have a range A to B. Now, let's say that you don't have a key level, and let's say your key level for some reason goes right here. But now, well, you can see a breaker structure. So after this break, the retracement ended and a new expansion begins. So that's why I went short into here. It was this I'm gonna get a wick, pretty self-explanatory. Obviously, I'm not holding it, I just close to the Asia low. That was basically my short. So also Geo played out awesomely. Really, 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 really awesome. And what can we anticipate? Continue to drop within the next week. Just drop, get into something and go along. Okay, but we need a teacher because no internal range equity right here. So maybe like this will be nice, but not the next week. In the future, let's say months or 2 months, if we're gonna do it. And let's check on gold. On gold, we said that we were bullish, and we had a pretty much a bullish week. Now, I don't know why on Friday we did this. That's weird. But here, I mean, we had a break right here, as you can see. And now that we took out this, now we had the range. I need to be, I mean, I'm not gonna be bullish, honestly, on this, because look all the pool of liquidity that price build up. And that's almost a trend line. And yeah, it doesn't look that good. So potentially I'm gonna be shorting on this range right here. That's gonna be very nice. Because this looks very scary to get along. And I don't wanna get involved on all of this liquidity. That's basically my POV. Isn't it from there? There were. Oh no, because the breaker structure came from here. You can see that's a major breaker structure. I mean, yeah, technically you can say it, but to me it's more cool than having always the major break. Okay, this is what makes to me more sense because I like to build up always the higher highs, the higher lows of the whole legs on the times because it's more easy to me to track structure. Because if I start looking into internal stuff, yeah, sometimes you can refine it, and maybe if you plan to enter directly on these ranges, you can have it refine it. But to me, the best way, and the way that I also want to advise you, is just basically take always the highest point and the lowest point of every single leg to have a clear way. Because also when you try to explain to yourself, it's more clear. That is basically why I did it for you. So that's why I always mark for the lowest point to the highest point. That is way, way more clear for me. So yeah, that is my view on gold. Yeah. Yeah, that'll be a very nice trade deal. I'm gonna upload them all into the trade deals, but if you got taken, it will be a fair swing. Exactly. That's what we're talking about. So imagine that you went long into this. Or even right here. That's the same stuff. Now it's a failure swing. So now you're gonna change your bias and you're gonna start shorting like me. That's why the failure swing is a so important concept. Not that much. Obviously, it's not important as ranges, key level liquidity, but it can save you when you're biased. When you're biased, T1 and T2 are very important. That's why we have built them to understand when a fake breaker structure may happen. That's basically when price broke structure poorly and instant reversing and also failure swing. So when a structural point get taken that was protected before a external liquidity gets carried out. Got it. It get a lot better. Awesome. So yeah, that was basically it. Let me also check the chart. More minimum ranges, train like culture, telemarketing, and timing ranges, just curious. Yeah. We're gonna do next time a backtesting session. Doing it, that'll be awesome. Let me show you. Oh, bro, no, what you sent me. Oh yeah, awesome. That was your USD. Oh, you got a loss right here. Oh, you got a bigger Kevin. Oh, because you're anticipating more trades. Oh yeah, you took that trade. Okay. Oh, okay. Thursday win. Okay, that's nice. Okay, let me. Oh, you guys don't see it. Let me fix it up. Okay, now you see it. Can I annotate? Yes, for sure to this. Okay. So, okay, your Monday was a loss, but I think because you didn't consider this as a break, but that's okay. I mean, at the end of the day, is your point of view and the bias, but this was definitely a very good long. So I hope now you understood also why I went long on simply price. After this, made a range, so this retracement. So every single range is gonna go long. This didn't reward you, and that's what I told you. This is basically what I told you. Oh wait, let me just check on the chat. Yeah, understood. Awesome. And this is exactly what I told you. This is your safe target. Imagine you just pay yourself right here. Even though you got the loss, now your win was already in profit. But in this case, it didn't reward you because, oh, I want more, I want more, I want more. The thing is, okay, now you get stopped out. And now, because you get a break even, now you try to get another re-entry. And what happened? Impatience. Stopped out. If you were disciplined with your trade, even though you hit a break even, you will say, okay, no more trades for the day. Okay, those are very important mistakes. that you need to work out. Because this is outside your plan. Outside your plan. Okay. So I will just personally, as I told you, exit right here, whatever your target is. Okay. I did just all the part I said. So basically becoming profitable in trading is two things. First, mastering a strategy. And second of all, mastering yourself. Because you need to master yourself, how you feel, how you're gonna do things, etc. And the most important thing. Now, this loss is okay, as I told you. I mean, it's nice. I felt myself lucky in those cases simply because I didn't saw it. So I took the one below on the H2, but that's 100% a valid loss. Okay, 100% valid loss. Just consider myself lucky in this case. I wouldn't lie if I could it, but that's 100% a valid loss. And I would prefer to get this loss instead of the TP, honestly, simply because it's not part of the rules. Okay. At the end of the day, it was just mostly personal preference. So at the end of the day, I'm not just gonna say, oh, that was bad, because at the end of the day, that's how I take it. So this was valid, 100% valid for me. What if instead of waiting for 4 hours, I just place force and trades for 1 hour? How do I get quick? Oh, that is fun. And then you had right here. That's outside your role. Oh, but, I mean, he played out and say, oh, luckily, oh, that's a daily key level. Oh, I thought because you want to go long, I do believe. I don't know why. Okay. But yeah, the correct one was being bearish, just look at this. By the end of the day, I didn't pull the trigger on this trade simply because I was scared of this. Yeah, that will be basically the trade I was looking into. But yeah. So and this was basically for the bias that I got it wrong. This was for impatience. Impatience. Impatience for Tuesday. This was 100% okay. And I mean, I wouldn't consider this part of my rule, but if it's part of your rule, that's valid. I would like to take out this, but I didn't pull for myself the trigger because I was scared of this. So if you didn't pull the trigger for this, that's okay. If you just want to get the short and say you don't mind so much because maybe you say, oh, liquidity is so far away. Yeah, that's cool. That's really cool. This is up to your our personal preferences in the stages. Okay. So yeah, that was bit, but that was a very good journal. I like this so much. Thanks for the calling. These days, market keeping me. I feel it. I mean, no, those days is cool. Depends on how you trade. But some days, yeah, there are weeks that you constantly at break even, and you start saying, "Well, that's okay," because at the end of the day, as I said, it's just statistic, and the statistic playing out is the most important thing. And that is basically what trading is about. Just doing strong low, low, strong low, strong lows, good taken, so now you do strong high, strong high, strong high. And it's the same stuff that we do. This is all over our edge. And that is like I need to do the one on GBP. Give me two wins by a match. Oh yeah, Geo is very good. You can to say. I mean, this week wasn't this good. It was more good. You. I fucked up on Friday. My rolls took 3 for trades. Invitation phase one pass. Need discipline. Yeah, that's why I said in trading you need two things. First, master a strategy, and now you master a strategy because I know you're very good with the strategy, but now you need to master yourself. And this may be the easy part or the hard part, depends on a lot of things. And I think that why you find it hard is also because where you're coming from, because you say you're coming from India and even uh, trading on dollars for you is a loss. So even if an average American sees, okay, that's a $50 trade, seeing it on your country currency is a lot. So that's why you start wanting everything soon, and that's why I start pushing you more hard. Maybe compare than me on anyone from the US or else Europe. And that is also something very important. I don't know why I have hiccups. That's not issue for me. Patience is the main problem. Yeah, patience is what you need to learn. But again, it takes time because you need to learn it yourself. And this is stuff that I can't teach you. I can teach you patience because patience should come from yourself. And that is basically it. Oh man, you're gonna tell me how to hold the tree. Just basically trust it. More that you trust, easier it is. That is basically it. What I did for myself is just take a trade and then after I did mine, so everything I could do, so just take the trade and put it through break even, just basically leave it and don't do anything else. But yeah, I'm gonna give some tips. So maybe also how to get discipline, because the way that you're in life, you're also reflecting trading. So if you're not disciplined in trading, you're not even in life. So if you're not patient in trading, you're not patient in life. And those kind of respect a lot. And that is it. So that is all for me for today's session. We gotta get a very interesting bias. Very like how all three pairs played out perfectly on the trade ideas that we shared. That is very, 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 very nice. Now we're just gonna let the market do its own things. That's basically what we can do. My anticipation is to basically go bearish on all three pairs, on EU, GU, and gold for the upcoming week. We're also gonna be loading the trade ideas. And yeah, that was an amazing call. Next call, we're gonna do a backtesting site for sure. Say something about it wasn't ratable. Uh, I got dedicated call on this because I can say so much stuff about the spear because basically every single thing that maybe right now you're facing, I also face it too. I'm not gonna say 100% of the stuff because everyone is different, but the main thing, everyone faced it, and I do believe this requires a very deep call because there are a lot of things to talk about that can be different on our experiences and kind of other stuff. But I will get dedicated call on like my full journey, not about like this story, because I don't care about this story, and I don't think you guys care so much about this story. I care about more giving you all the tips and the knowledge that help me surclass every single phase. That I believe is the most important thing. How I went through and what I discovered that wasn't keeping me not profitable and the main issue, because uh, I'm not different. I'm just like you. I'm just a regular guy that's basically did it. Not that much. But yeah, if you like it, yeah, for sure. We're gonna do it. And yeah, that was amazing for me guys to do this session. And let's get in touch in the community. I'm gonna posting a lot on the trade ideas this week. I'm gonna be uploading the trade ideas that we sent. And maybe that much. Okay. So thanks for you guys. See you in the chat. Bye bye guys.